Specifically, we're going to be taking a look at Bitcoin and diminishing returns, including price targets for this current cycle that we're in. And then we will, of course, revisit yesterday's Ethereum and take a look at what the price targets were for 2025. That was omitted from yesterday's session. It was a fantastic session. If you didn't see that session after this one, go back to go to the YouTube channel, subscribe if you're not subscribed. Hit notifications if you don't have notifications, but go to the live section and go to yesterday's video on Ethereum 2025 price targets. It was a really strong video. I hope you enjoy it, but we didn't, at the end of the day, talk about what 2025 price targets were. And you could see that I was kind of setting the tone or setting my belief that we're not going to have the peak in 2025. I did talk about what invalidations at any point would be and pointing them out. And that still holds. And that could happen in 2025. People were asking thoughts on a recession into 2025. And that seems much like a whole macro section to get into and to talk about. But recession right now is not on the horizon. It's the markets. Things could change quickly. If things were changing quickly, it would likely look like there was some type of hiccup as far as liquidity within the financial system. And that would likely, like the last time that happened, was September 2019. And that was addressed very quickly. It's kind of like if the Fed is cutting into a crisis a year out, the returns are spectacular. It's because they had to come in and they had to go ahead and inflate and print. And if there's any type of liquidity crisis, well, they have to address that very quickly. And then risk responds very well. So that could happen in 2025. We've looked at, and we'll talk about it in another day, the reverse repo, pretty close to being drained, which puts, more pressure on the system. It's not an exact signal. It's a clock counting down, though. After this rate cut, December 18th, FOMC expected to cut 25 basis points. We might see soon thereafter the reverse repo drained. So in 2025, we could see something like that, except that's not a recession. Right now, we're looking at Atlanta GDP estimates are actually increasing. We're not seeing any signs of a recession on the horizon at this moment. We'll check back in another day at another time. However, what I was trying to do was push my expectations of where I believe that we're going over these next, not only year in 2025, into 2026, beyond into 2028, before that next Bitcoin halving. We'll come back and we'll get as accurate as possible for all of you who are looking for what potential price targets are for 2025 on Ethereum. Right now, we're just going to go ahead and flow into this session over there. Thanks for hitting that like button. I appreciate that very much. Liberty, there's something about the honeymoon. Honeymoon is so many things to so many people. It does set the tone. It sets the tone in so many ways. It's like you've heard Matt Odell, stay humble and stack sats. Honeymoon is our way of staying focused and calm and Zen-like as we go here and approach something that some might think is with gigantic hubris, conquering the markets. Okay, taking one of the most difficult things that there is in the world, the financial markets, which brings the brightest minds from all over the world to compete for capital. And then we're talking about conquering them. Listen, it is what it is. I chalk it up to providence. I don't know how else to explain it is that we have all come together and share this beautiful thing that we do, this like-minded community, many people with just such fantastic hearts and goodwill. Forget about the collective power of the hive mind and what it is that we have done. There's no else to explain it if you understand how difficult markets are. It's just that, well, we chalk it up to providence. But there's a big difference between losing your shirt in these markets. This is pretty really, this is the time where you should be putting yourself into a position of power should we enter into a position of having to grind out through. So we want to make sure that you're on the right side. You have every reason to be on the right side right now. I'm going to say it quote unquote, right now these markets are easy. Of course, there's nothing easy about it, and it requires you putting the work in, but everyone should be able to accomplish what needs to be done. Yeah, honeymoon during tough times, and honeymoon during really, really wonderful times. All so many memories. All right, here we go. So we're looking at Bitcoin right now, trading at $101,000. $101,000. We are just 1% of the way on our journey up to 1 million. We're going to get there. I think we're going to get there. Right now, you can see Bitcoin is consolidating into this resistance. Here's the consolidation, right? And you could see that he is consolidating right below the last structural resistance. Very healthy thus far. We continue to look. Nothing has changed. Everything has stayed the same ever since here in November, right? We have this structural line over here. The only thing that changed, actually, this changed. It was over here off of this low. And then after that wick down, I bought it down over here. That's the only thing that's changed. Same analysis, though. As long as we stay above that area of structural support, this is a very healthy consolidation in play. If we break and close below that green line right here, at that point in time, then we're entering likely into a more prolonged and deeper correction. Not much else to say about that. Now, our targets coming back all the way into early November for December are very much in play over here. And again, it was, and we've already hit the 100,000. That was expectations could happen by the end of the month if things went bazooka. And they have indeed. And you can see this trend line over here into the end of the month. If we break above this area of resistance, closing above it at that point, and look at that next little resistance coming in around 110. We got a couple of areas that we've looked at together. You can see right now towards the end of the month, let's say there is a Santa Claus rally. You can see 114 and 120. Those are very light areas. The bigger one is over here, all the way up at 127 into the end of the year. That would be a really big leg up if that were to occur. But we've seen some big leg ups. We're consolidating healthily right now. It looks like accumulation is taking place. Do we have any type of distribution to work out? I don't know. If I wanted to go ahead and make a Wyckoff in my mind, you could see that. Look at this. You ready? PS, then the higher high, and then the LPSY. PS, the higher high, the LPSY. Oh no, is that in play? And then what's the next thing that happens? You come in right over here into that structural resistance right over here. So if you broke down, here's the schematic. Here's the LPSY. If you broke down and then you come right into that lower structural support, is that what's happening right here? Is that, are we seeing once again the return of the Wyckoff distribution? It could be. I don't know. I mean, a confirmation of that, and we just talked about this line over here would be a breakdown over here. If that were to set in place, we just said that, well, we probably have a more prolonged drawdown and deeper, but that would probably be just setting up a move back towards this area right in the $80,000 pocket, and that would be a good thing. We just want to stay ahead of it and be aware of what's taking place. And as it's happening, Bitcoin over here looking very healthy, looking at the log scale, linear, and we're at 101,000. We saw more inflows come into the market yesterday, and we see this strong streak continue. Bull market run, BTC bull market run continues to hold open position, 56% into profit. We had that entry on 108 yesterday. It's still holding. BTC 107 is out of the market still, as well as is the buy side only BTC 101. And we've looked at on the buy side only that why the BTC 101 is really just navigates markets so well. It's on the sidelines right now. Ethereum here returning to an entry once again over here. And even CTM 2.0 is back in the market. Ethereum right now trading under 4,000. You might wonder, what are the price targets for Ethereum in 2025? I'm sure a lot of you have some price targets, but we will look at that. Cardano continuing to hold open position here, 208% in unrealized gains, bouncing back thus far. Let's see if it can make a new high. And Solana is getting ready to enter the market here. That right there is beautiful. Let's see if it happens. I wanted to start off with this. And obviously a lot of people, this is in response, by the way, to Dr. Adam Back. Yep, the Adam Back that was sourced by Satoshi in the white paper. And he thinks, in his own opinion, this is something that we have kind of ever since. Like, we've fully embraced S-curve adoption, going back towards the last bull market and where we were, and putting out and setting out that goal of jumping the chasm into the ultimate market opportunity as adoption hits the early majority. That's where we are today. We're there today, but this is someone else who embraces S-curve, may enter the steeper years now. I guess this is very much how we see the market. If we passed gradually phase onto suddenly, new users compounding adoption effect. It's not only new users, it's also the magnitude of the spend of the new users, right? Again, retail is irrelevant this time around, not for alt season and for alts. The more money people make in Bitcoin, the more speculation that will be taking place in the alt market. Invalidating diminishing returns halving theory. And just a quick and brief refresher when we talk about how S-curve works. And again, this was all worked out into, and right over here in 2021, late 2021. And we had the hype phase of an S-curve, the facing reality. And then the goal is to get into the ultimate market opportunity. And right here, especially and specifically, all right, what happened in between the end of the facing reality? How many times did China ban Bitcoin? How many times did Russia ban Bitcoin? Who openly supports Bitcoin now? What happened to the U.S. administration? They were heavily against Bitcoin and crypto. The incoming administration is heavily for. They're even talking about starting to stack some stats, a strategic Bitcoin reserve. Other nations, such as even Russia and Brazil, are also talking about embracing and doing the same. And we're seeing public companies really beginning to get on bid. Just this week alone, we saw Marathon take a $1.1 billion Bitcoin position, raising money in public markets. And my expectations are that we enter into something like this. Here's Amazon on the S-curve, and you can see the hype phase, you can see the facing reality phase, and then you can see the ultimate market opportunity, right? You can see Microsoft has done a similar thing as well. Here's Microsoft once the page loads. Hype phase, facing reality was much smaller from ultimate market opportunity. Windows 1995 into the dot-com bubble, and then it entered a new facing reality as we had the anti monopoly suit filed versus Microsoft. They were forced to give over their control of the browsers that were implemented in the software of the operating system that everyone run. But during this time, they also moved towards cloud computing, and they were able to make it into a new ultimate market opportunity. So that's kind of neat to see that happen over here. And that's my expectation. And just one other note is that as Amazon did that, we look at the structure of Bitcoin all the time. It's pretty neat that as Amazon enters the ultimate market opportunity, and it's not straight up and it's not like this, right? There's lots of 30% drawdowns along the way for Amazon. Now, Bitcoin is still more volatile than Amazon, and who knows, right? We might see easily steeper then, but you could see multiple 30% drawdowns, and even recently, a bigger one, a 40% drawdown. But my point is that this is the top structure of the hype from the hype phase, and then you can see during the facing reality, diminishing returns. It looks like diminishing returns to me. It looks like diminishing returns to you. Only then it went into exponential growth. That's what Dr. Adam Back is foreseeing right now. And also notable, later on, look how it climbed up into the upper trenches of the structure. It didn't just continue diminishing down on the walk up. That's exciting. If Bitcoin were to do that, we would see some very, very elevated Bitcoin prices. We will look at that. I just wanted to explain the S curve, what Dr. Adam Back is seeing and what we've been seeing. And then other people are like, I don't know if this is the guy that does Bitcoin power law. It might be. He's talking about, well, we're seeing a decay of tops. We're seeing diminishing returns, and that's likely what continues. And if you look at one thing over here, I guess the one thing that you could say is on the drawdown part, we were seeing deeper drawdowns, and then now we're seeing the drawdowns go the other way, diminishing drawdowns, which is expected coming into the ultimate market opportunity. We expect that we'll see the degree of drawdowns actually diminish. But he has over here, like the next top should be about 270,000, which is very interesting because we've put that number looking at what we are, looking at the next cycle. We've put that number as the number that needs to be breached to disprove diminishing returns. And here's someone else doing from a different angle, putting in that same area. So we'll take a look at that more closely. I like this, though. I like this a lot. This is Bitcoin decay, volatility. And we do, I expect that. I expect we were just talking about we should be seeing and begin to see diminishing volatility on the downside. The drawdowns should during ultimate market opportunity become less and less. By the way, nothing's guaranteed. Nothing is guaranteed whatsoever. Right today, it looks like a lot of things we're seeing and then suddenly take place. Now, and then suddenly is a lot different if you were to see hyper Bitcoinization take place. That's like, we're not seeing anything like that. That's not on the horizon or anything like that. But we are seeing a move from at first gradually, which is what we've all lived through for the past several years, more almost decade, many of us. And now we're moving towards the then gradually phase. I like this a lot because if you look at what's taking place over here, this is kind of very much the trajectory that we embrace, that we look at. And the decay of volatility, here's where it gets tricky. The returns, obviously, on the upside, we talk about diminishing returns being potentially disproven. It's not because you're going to see height phase behavior as we've seen earlier in Bitcoin. It's because all of a sudden the structure is going to change and walk that way. But look at this. Into 2025, we have some potential price targets, right? And we'll look at that like in relation to our own work over here. So on the high end, 200,000. I think that, well, I think a lot of us think that that is something that is completely feasible in 2025. Oh, this is in 2024. That's very high, right? We're over here right now in life, right? So that's on the high end. Okay, obviously it's not happening, and that's the high end. The blue line is, I guess, the lower high end. I think that's safer to say. We're down over here at 100,000, so we seem well within range. Seems perfect to me. Into next year, into 2026, if there's not a top, which I don't think so, in the first quarter of 2025, I don't even think that we've started. And I think the top does come a lot closer to 2028 than 2024 having. Very, 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 very certain about as myself. Don't you be. But in 2026, if there's not a top in the first quarter of 2025, which many people are looking for right now, then a lot of people are going to be looking for that top come November, December of 2025. And over here, you can see that the lower high end, the blue line, is coming in around $200,000 Bitcoin. And I think that most of us could foresee at some time in 2025, Bitcoin reaching 200,000. All of us, because of what happened last cycle, we have subdued expectations. I think that's good and that's healthy, except for the people because of that wind up selling likely in my own opinion, in the first quarter of 2025, if Bitcoin were to reach something like 150,000 Bitcoin, it's peaking. I'm out of here. I am not going to hold through another bear market because I was unable to pivot when we had the technical breakdowns. Obviously, that is just not us, but everyone else out there. 4-year cycle has already been invalidated. So on the high end, though, we have over here in 2026, and I think that's pretty high as well, somewhere around 250. So I think this gets disproven. We'll look at what needs to happen for diminishing return to be disproven. This seems very good and very healthy. Seems very good and very healthy to me. I like this a lot, and I'm all down with. We are seeing a decay of volatility. That does not, however, equal or equate diminishing returns. Let's take a look at why. And then we see, I asked the question, by the way, like from the people out there on X, hey, look, which point is diminishing returns measured? So you had people saying either the top or the bottom. Very few thought from halving to halving. So we're looking from cycle top to cycle bottom. And, I like that a lot. If you look at the first peak of Bitcoin before, in that first, the first halving or the launch before the first halving, you're looking at Bitcoin $30. Then after the next halving, 1,100, right? And then the next halving, like how do you measure it? We all $19,400, $19,600, right? Or you could say 20K Bitcoin, whatever is easier for you. This is how we all relate to Bitcoin. And the next one, most people will say, oh, over here, 64,000. Was the top here or was the top here? I don't know. I mean, obviously the highest price point was prior to the halving. That's why the 4-year cycle is invalidated. So Chris was just asking, if we're entering the ultimate market opportunity phase, does this mean the 4-year cycle will be invalidated? Many people have talked about why the halving of the miners reward has a very, very, just not a high magnitude effect that has had in past cycles anymore. And it had a gigantic effect over here. It had a really big effect over here. It had a big effect here as well. And at this point in today, and everyone knew coming into it well in advance that it was going to have a lesser and lesser of an effect. The market is much bigger. The amount of the miners play a much lesser role today than they did in the past. Now, Bitcoin made a new all-time high prior to the halving of the miners reward. In the past, and each and every time, it was roughly 6 months, or in this case, a little bit quicker because Bitcoin was much, much younger. It was after the halving of the miners reward that price was able to jump above 0.786 retracement fib and then into a new all-time high. It was after the halving of the miners reward, price made it above the 0.786 retracement fib and then a new all-time high. It was after the halving that price was able to make it above the 0.786 and then to an all-time high. This over here, both those things happened before the halving. The halving was not the catalyst that did it. The 4-year cycle is invalidated. I think that if we measure cycles from halving to halving, that's how we measure cycles from halving to halving. Now, it could be measured as well, and I do think this is authentic. If you measure it with bear markets, where price comes down, for example, over 70%. The rational root, we first spoke with the rational root in some point in 2021, and he's like, I consider a bear market begins after prices move down 70%. And I was like, well, I think that is really late, and the bear market bottom is almost reached. You're pretty close to it. But if you're measuring cycles and including a bear market, because you had a bear market, you have a bear market, you have a bear market, and you have a bear market, and price comes down over 70%, then you could say that the high was over here. And I think that's authentic. If you're measuring from cycle to cycle by halving, well, then the high was over here. True to form. So Yes, Henry. This is dependent on that adoption continues. All of this is dependent on two things. The bullish case for Bitcoin is dependent on what I think and many think is the mathematical inevitability of the continued devaluation of the dollar and fiat. There's no other way. And also the continued adoption of Bitcoin. Both those factors are what and why Bitcoin. So we're assuming those things continue. And if you look at right now into December of 2024, it clearly looks like not enough people have hit the thumbs up button. We would like to see more thumbs up hit during this session. So if you're watching this right now on the replay, big shout out to you. Please go ahead and also light up that button if you are here right now live. Now, let's go. So let's measure this a couple of different ways. And we were talking about how people talk about the highs and they remember each cycle high. And we've seen massive diminishing returns from high to high. No question about that. However, the last high, and again, I don't know if this is the high or if this is the high. So I'm going to go with the higher price point, just to be fair. That's because I personally view this as the high. And I gave you the other reason why it might not be the high. And that's true. There was a bear market in between. But you have over here, we got to be a little exact. So here's the highest price point. We're using highest price points. We're not using closes. And that's 272%. And then you come over here and you have to start at the high. And this is the highest price point. And we're not making the markers easy. We're making them authentic against us. We want to be able to beat these things. 272% puts us at, what was that number that we said that confirmed our own? 270. Remember we said that's the number we came to? And you could see why someone projecting that diminishing returns needs to take place would put the next top somewhere around 270. Because if that top is taken out, if we trade above 270,000 Bitcoin, then, well, from looking at this from cycle top and setting the higher marker, not setting the lower marker, setting the high marker, diminishing returns is disproven. I personally think that the high of this cycle is going to come closer to the next halving than this halving as it did in this previous halving. And I think that the drawdown is going to be diminished. Now, anything could happen. It's the markets. We'll take it as it comes. We are looking at trying to give, looking far into the future, 4 years into the future, and trying to assume what likely is a high probability of occurring. Now, if you were measuring also from cycle bottom, which I think that's a good way to measure. I mean, a lot of people do it, and we've seen diminishing returns from cycle bottom in each cycle. In this next cycle over here, to go from cycle bottom to cycle top, that was a massive gain. And by the way, some people say like the gains are made during this phase as Bitcoin hits the new all-time high. That's when most of the gains are made. That's no way. The gains are made from the bottom, getting in as early as possible. It's why we called the bull market breakout in 17,250. Go to the channel in December of 2022. Bull market breakout, boom. And it's because I wanted for us to forget about de-risking at the top. I wanted us to be able to get in as early as possible. And it was not a given. It could have been invalidated at any time along the way. I think if we did not get the favorable court ruling right over here, that there's a good chance that would have been invalidated. It didn't happen. It came very close over here during the banking crisis of 2022 in March. It didn't happen. It just never happened. We were looking for it, and it's held up to where we are today. So we're looking at, I do want to get exact as possible off the bottom over here. So I think that's pretty good. So 2,200% return. And what does that mean? That's going to be a high number, I assume, to beat diminishing returns from the bottom. So, not really. I mean, it is a high number. Don't get me wrong. I thought it was going to be higher. So 359. So let's just like diminishing returns. I believe that there's a good chance that the theory becomes invalidated. Other people like Dr. Adam Back are embracing that as well. This is something that obviously we have been putting out there for quite a while. If you followed our work in late 2021, here we are now. This is the area, if we trade above 270,000, diminishing returns from cycle top is disproven. If we trade above $360,000, $358,000, then from bottom to top is disproven. Do you think that we have potential here? And is this dependent maybe on things like do nations take a strategic petroleum reserve? I mean, likely. Now, there's a lot of positivity flowing in that way. Right over here, I want you to take a look at Bitcoin lined up from cycle highs. So you have previous cycles lined up from cycle highs. And what do you see that's different? Well, I see that this current cycle, the white one, it had the most diminished like downside volatility, and that at the time of the halving, it was the highest. There's a lot different happening here. This is the first time. These two, they bottomed at the same time, the same percentage, and coming into the halving, they were roughly just before, just after, and right around the same percentage off their high. This one is this is different. So far, this is different. In the past, those previous two cycles, they met twice. They met over here, which would be about 130,000 Bitcoin. And they met over here at 180,000 Bitcoin. And they met over here as well at 240,000 Bitcoin. Do you think that there's a strong probability that in 2025, that potentially, I mean, we're seeing some things are different thus far. It doesn't mean that they'll remain different. Like Bitcoin could at any point, even though it started higher, it could go below the trajectory of any past cycle. That's all possible. All I'm saying is there are 3 points where the past two have met. If we were to meet again and we were to see something like 237,000 Bitcoin into the end of 2025, I think that's well within everyone's expectations, and no one would be surprised by that. And if that were to happen, do you think that the potential exists for Bitcoin to take out 270,000 diminishing returns? I think it's very highly probable, actually. And I think that this top over here was actually subdued because of things we've talked about in the past, like the naked selling over here. I think this cycle here has a tremendous chance of disproving diminishing returns. That's what it has to happen in order for it to look like. Here is this very elevated blow off top of 2017. I don't think that we're going to see anything like that with this type of market cap unless central bankers began printing hand over fist for Bitcoin. I don't think we're going to see anything like that. But it doesn't mean that we can't get up into this area over here, because I don't think that it has to happen by 2026. I think it's going to happen over here as we move closer into the end of the year. By the way, you're looking at between 180 and 485 is the pocket of the previous two cycles. My expectations is that we are peaking towards the later end of the year. In 2026, we looked at a couple of numbers that could happen. One of them was, we said, is it possible we hit something like $240,000, where previous 235 over here, where the previous two have hit? What would have to happen? So right now, and I want to just go off of this point as well. This is the line over here. That's the line that Bitcoin reached prior to the halving. So if it were prior, I don't know if it will. It could be higher, it could be lower, right? This is the baseline, the bolded line. This is the baseline. If we came into an area in 2028, we're looking at April right now, 2028, the projected halving. If we were able to ride up into that line again, now, does that mean that we should not be riding the lower line at any time between now and then? Nope. I think that we should and likely will be riding that lower line again at any point in time. I'm just saying if we were to see prior to the halving of 2028 price to be able to ride back up to this line that it's in right now, that it hit in March and that it's in right now, the price of Bitcoin would be above $500,000. Above $500,000 would blow out the theory of diminishing returns any way you look at it. What happens if we're at the lower line in that area, the lower line that price spends a lot of time around, or actually a little time around? We have the lower line over here, right? And we talked about ever since 2017, we have spent maybe between 10% of the Bitcoin's time underneath that lower line. And if we're at that line in 2028, April 2028, that right there is smashing diminishing up. Where are we? April 2028. How do I get there? Someone help me out. April 2028, 265. So that would not be diminishing returns, but I think that that would not be diminishing returns if we never took out that price. So on the low end, we'd be matching last cycle. That's my low end projection of where we would be during that time. I don't want to talk about any higher end projections. And, I'll just say this. I hope as we get closer to the end of the decade that we are able to ride at some point in time towards those higher trenches that we saw on Amazon. So in 2026, if the bull market was peaking in 2026, it's not known for peaking into this resistance. And each and every time it's traded above this area over here. Let's look at this line over here. That's like a subdued projection of where we could be peaking into let's say December 2025, 231,000 Bitcoin. And I said subdued. I think everything points to this cycle diminishing returns is disproving. Even if we were to peak in late 2025, I don't think that's happening. Let's take a look at what's going on with Ethereum along those lines. We didn't put in what would be any type of Hypernova, big shout out over here. I would be extremely surprised even if there's a Bitcoin strategic reserve, I would be so surprised if next summer we got to 500,000 Bitcoin. I would be so happily surprised. I don't think anything like that personally is going to happen. I would be so happy if it did. What I tried to do yesterday was give projections of where we would be into 2007, 2008, where I think the top will come or the highest point of the cycle. However, if we were to peak into, let's just use November, December 2025, right? And we were to peak onto this medium line, this is where we have like the upper end targets, these two lines that we put out yesterday. That's coming in like around, between 10 and 12,000 Ethereum. If that were to happen, if we were to able to reach those highs, they seem loftily to me during that period of time, but I guess we're already at 4,000. So it's very much in play, let's say. But I think monetary policy really has to align for Ethereum to fly, and it's not yet. The what would be a more realistic target over here, and let's just say the line that we're into right now, and Bitcoin, Ethereum trading around or just below 7,000. That's something that I feel comfortable with. I feel very comfortable with that. And rather than just like giving what could be the outsized upper end expectation, I think it's really healthy to have expectations that you could meet and beat. I think that's really good. On the low end, we could be trading all the way down, much lower towards 2,500 Ethereum. And if this were to break and we would take out this lower structural support right over here, that would be very bad for Ethereum. That's the technical breakdown where I would say this is different. This is not good. We'll have to take it as it comes. Doesn't look like that as Ethereum here is just under its all-time highs. That right now is in the cards. It's the markets. Things could change very quickly. It's why each and every day we are here with our heads down, putting in the work so that we could stay in front of it and on the right side. A couple of things to talk about here in traditional markets. First of all, two things. This potential distribution still remains in play, right? Even though so far we've had the breakdown, the retest, and are resuming up. Very healthy thus far. And I want to close above this upper end wedge resistance to invalidate this this potential distribution taking place. If we break out down below the lower trend line of the wedge, that would be a big technical breakdown, one that could not be ignored and could be the earliest sign of a reversal. Don't forget, for this schismatic to be actually confirmed, the lower trend line needs to be taken out. That's all the way down here, just below around 18,000 NASDAQ. That's really late for CTM. Even if the result of that were coming in and testing the 2022 lows or something like that. We want to be as early as possible. The earliest technical breakdown would be this trend line, and that would be a technical breakdown we don't ignore. And then we would have to look for a repair to be made in order to invalidate the breakdown. That's how we are living. I like this chart, by the way. I don't know if I showed it to you or not, but I want to show it to you again because I like it. This is talking about not all bull markets are created equal, right? The ones that were not preceded by recessions, here's their average gains. So you have 80%, 48%, no recession ahead of it. 62%, 65%, 70%. And then you have another thing, ones that were preceded by recessions, and they go a little bit higher. This is the current one we're into right now, 70%. No. Nope. Yeah, no. No. Then you have over here ones that were preceded by a recession. And they're almost right around the same height. 86, 74, 73, 102, 114. But ones that came out of a recession, those entered the biggest bull markets. And you could see them much, much, much dwarfing the other returns. What's kind of neat about that is that we just did the Bitcoin power law. There's a video, but sorry for skipping back. So there's a video from last week. It's on the Bitcoin playlist if you go to the YouTube channel, and it shows you why the Bitcoin power law is very close, but why it's not as accurate as this right here. I don't care if it doesn't look as nice as the Bitcoin power law, and the Bitcoin power law will give you the exact same lower end price. It doesn't give you the same higher end price. And is this the guy that did the Bitcoin power law? Yeah. And this is the guy that believes in diminishing returns. That's what we're trying to say, is that likely under S-curve adoption, we don't see diminishing returns. That's what this whole episode's been about. And even though it's a lot better than I thought, the Bitcoin power law, and in that video, it's very detailed explained. It also explains why that likely, and you won't know until the next 5 years, but 5 years from now, likely you are going to see, actually, it wasn't the Bitcoin power law. It was actually some CTM chicken scratch that provided to be the most accurate. And as I showed you earlier in this session, likely everything continues as it is. We're towards the top end of this trench as other assets that have undergone S-curve adoption ended up during their ultimate market opportunity as they got back towards the structure of what was occurred earlier on. So There you go. But check out that video. It's really good. So Jay, why diminishing returns will be disproven on the upside, the diminishing volatility. And again, earlier in this session, we talked about this is very much embraced. This includes both on the downside, which you've already seen last cycle. You're going to see a lot more this cycle. And then on the upside as well, except the problem is that if you don't have a bear market in between, well, then that's when you see the exponential growth. It's what Dr. Adam Back is trying to as well share with the community. It's what we believe is happening. And I guess, Bitcoin is running. The great Hale Finney also believed as well. So again, it's going to be a long time. But if you're interested in seeing the other end of that, go ahead and watch that video on the Bitcoin playlist. And you'll see why at the end of it, after digging into it, I was like, okay, the Bitcoin power law, there's a lot to it. It's a very good model. Its lower end matches our exact lower end in 2030, except that likely its higher end is way off, and you're going to see, and then we'll find out. Little smile, a lot of love, beautiful ace. So what else are we looking at? Well, this is what we're looking at. These are the assets that CTM is holding in on. Ethereum, NVIDIA, Bitcoin, FNGU, Tesla, TQQQ, our little train that could. The least performer out of all of our baskets, however, outperforms everyone else out there. And let's take a look. So NVIDIA, this is what we need to regain the sell impulse that first occurred right over here. And what's neat about that, if NVIDIA does invalidate this sell impulse over here, because you can see it came into the support. We put the support in horizontal. What are we thinking? It came into the resistance. That broken support was resistance. Had another leg down. That looks like it's kind of been invalidated, but not. We said it has. We trade above this trend line yesterday. That's when we invalidate it. It would be the same point of the breakdown, but we'd be on the right side and staying on the right side. So NVIDIA here. And then also, I guess, I just want to, I guess you don't see it. I don't see it. It's too many, right? It's too many. But we have to place it in off the low if we have a continued breakdown. Sorry about the chicken scratch. TQQQ, the little train that could. We just talked about it since 2020, a mere 870%. Again, still, what is that? A nice 190, 200% yearly gain. Little train that could. NVIDIA is out on the sidelines. We just looked at it as it's consolidating here with a little bit of potential weakness to it. Looking for that invalidation back to the upside. If NVIDIA begins running, the markets will have a big push to them. But we are at new all-time account highs on NVIDIA. FNGU printing new all-time account highs, up 43%. And Tesla printing new all-time account highs, 46%. When I said that this is the little train that could, in looking back since 2020, 3,200% on NVIDIA, FNGU 3,700%, and Tesla 4,800%. Nevertheless, don't underestimate it. It's super solid. TQQQ. Dollar here, not much to report. There is something to report on yields though. So let's take a look at it. And right now, this is a major, we got a, even though people think that yields are going to go bid here as the Fed cuts, we are taking that double black diamond underbelly breakout, exiting the trade here. We came in and tested support, and now we have that breakout. So now we got to get back on the other side, the right side of the trade. This is a switch now to back short bonds. It's a major shift. So here was the exit. Here was the entry, short bonds. Here was the exit, and the entry is right where the exit was. So right back in the trade. And even though this didn't accelerate down, right on the right side at the right time. So major pivot occurring. This could suggest, we talked about past 2 cycles, that as the Fed cut and then bonds sold off, what they did. And we said if we only came into this line and then came up, we actually, I guess I didn't imagine it, but we could be heading for much higher yields. That's the expectation now. Expectation is we take out the 4.5 and we end up higher. So that's very important. Dave, I'm not sure. I really don't follow, as you know, much to it doesn't in any way, shape, or form, except maybe trying to like speculate when a recession might come on the uninversion of the yield curve on the but we've seen it flip back and forth this time. I'm not really sure. I think Peter from Game of Trades is really good with that type of stuff. So that's the direction I would point to you. So there we are for today. There we are for today. Oh, the Drunckenmiller. Yeah, Drunckenmiller. This one goes in Drunckenmiller's favor. He's probably still holding his short position. He went short right here as well. So I didn't hear any report that he closed out his trade. He's still holding. And hey, we're back in the same trade though with precision. And that's what we want to be, as precise as possible. Everyone, great session. Have a beautiful day. Any thoughts you want to share, please do. Send them in the comments. We'll look at them tomorrow's session. Beautiful day, everyone. God bless you. I'll see you all back on the inside.